Like, look at gold. Gold is at an all-time high, but is anybody talking about gold? Or are they talking about crypto? Are they talking about, the Magnificent Seven? Are they talking about, other asset classes? So we're in an environment right now where everything's moving up. So throw out all the old ideas of $50 silver, $100 silver. Maybe the masses don't even wake up to this until it's $300.
We're continuing our coverage of the Vancouver Resource Investment Conference 2025. Shawn Khunkhun joins us today. He is the CEO of Dolly Varden Silver. We'll be talking about the future of humanity, really, and what place silver has in critical minerals, not just silver. Silver is a critical mineral, but why minerals are so critical. Welcome to the show.
Thanks for having me, David. Good to see you.
You're aware of the Malthusian trap, English economist. He proposed the idea that we have limited resources, and as the population grows, the scarcity of resources will become an even bigger problem. Interestingly, he wrote that when the population was booming. This was a 18th century theory. The population is shrinking now around the world, especially in OECD developed countries. The fertility rate in Canada and the US is below 2. In South Korea, it's like 0.98. That's the most severe I've heard of all developed countries. And so I wonder if we're still going to have this issue that Malthus proposed in the 19th century, which is that as population growth expands, the need for resources will not be met, and we're going to get a scarcity of critical minerals.
So do you think we've seen peak population?
No.
Okay.
Not yet. I think that there's still... I'm not I have a mapped out demographic forecast myself, but according to most forecasts, we will be peaking around 2030 to 2050. Something like that. So assuming their assumptions are right, yeah.
So you're saying the planet has a chance?
If people stop having or, don't have more babies at the rate that they used to, what's your take?
Look, those are really interesting topics. I will simplify it to the ascent of man. I first heard it from Rick Rule, from Doug Casey. I believe in the ascent of man.
Okay.
And in that ascent, there is further demand for everything. And so I buy into the theory, and I've focused my strategy around one metal, which is silver. And what's really interesting is if you go back a few decades, 2/3 of silver was used in photography. Mm-hmm. Okay? We're not printing pictures, everything's digital. So the number one industrial use for that metal is gone.
Yeah.
So what should have that done for supply and demand? What's happened though is silver's picked up in EVs, in photovoltaics, use in solar, in weapons. So there's actually other industries have picked up the slack, and today 55% of silver is being consumed by industry. So what I see in the silver market is I see a metal that is scarce. It's not evenly distributed globally in terms of geography. So the metal is found in its pure form in just a handful of countries. And those countries, there's a lot of uncertainty with those governments. And so, look, I think we're setting up for, I was at a conference yesterday where Peter Krauth hosted a panel. He's written books on silver. He's got a silver newsletter. And it looks like the setup for silver, the technical setup, the cup and handle formation, looks like you've got a metal on the verge of a breakout. And, I go back to when gold broke out originally in 2010. When the breakout occurred, the prices don't stop. Prices won't stop at 50. There is no overhead resistance. So I think we're setting up over the next 18 months for a move in silver that will have us in the triple digits.
The issue of the deficit of silver,
Yes.
could that be solved with more money? Let me give you a hypothetical scenario. Suppose somebody were to present to you with $1 billion today. The mandate is just to solve our energy or critical minerals crisis. Go find more silver.
Yeah.
Could you do that with $1 billion? Is that just,
No, you can't do it. And it's a great question, and it's a great approach, because, and this is what makes me really bullish on the metal. 72% of the metal comes as a byproduct. And the projects that throw it off are really capital intensive. These are $5, $6, $7 billion builds, and they take decades to explore, advance, permit, and ultimately mine.
Yeah.
And so you can't throw money at the problem. Okay, $1 billion, $10 billion, maybe $100 billion, and you could, the problem is, if you look at silver, high-grade pure silver comes in veins, okay? These veins, when they were mined 100 years ago, 200 years ago at surface, in places like Nevada or Idaho, they were economic. But as those resources get depleted, you're having to go further and further at depth, and it's very expensive to develop those projects. So throwing money at the problem is not something that we can do.
So what do we do?
Look, I think what we have to do is the cure for low prices is low prices. The cure for high prices is high prices. So I think the reason the silver price is up 100% in the last few years is because of the scarcity. And so what we do is we let real price discovery occur. We if the price gets high enough, there is physical silver. There are stockpiles. There are investors globally, in the US, throughout Europe, who could, at some point, will be incentivized to bring the silver out of the vaults. Now the question is, David, what's that incentive? And there was a great gold panel here with Frank Giustra and David Garofalo and Grant Williams and Alistair Still. And what they highlighted, and the same is true for silver, it's the measuring stick. Gold and silver are not changing, but the fiat currencies in which we measure them are being diluted. And so, for some investors, what $50 might have been an incentive a few years ago, but with the money printing, with the deficits, and with the scarcity, and now with this EV and photovoltaics and the use in military, I think investors are going to want more because their dollars aren't going far enough.
What are you doing? Specifically, Dolly Varden Silver. What is your your role in this story?
Look, we've got, we started as a very small company.
Yeah.
And so when you're small, you want to be ambitious, you want to be aggressive, but it has to be measured. So what we did is we started by, we identified the problem, okay? Miners mine, they deplete inventory, let's secure their future inventory. So the strategy, the vision, the business model was identify high-grade silver and build a mineral inventory, a real mineral inventory, not a mineral inventory that's 2 miles deep and 1 meter wide. Let's find a bulk mineable high-grade mineral inventory in a mining camp that's been operating for 100 years, and let's go out with the best scientists, and let's have those scientists backed by investors who understand mining, real investors, not speculators, not hedge funds. So fundamental investors who understand mining. So these are mining companies.
Yeah.
These are institutions that specialize in precious metals investing. So let's get the appropriate capital. Let's give the scientists that capital. Let's give them the time to grow that mineral inventory through state-of-the-art technology where you're identifying veins, you're growing them, but let's also do this. Not just in the field, but in the boardroom, let's sit down and let's look to do accretive acquisitions. So our greatest growth has come by being financially strong and being in an environment where we've taken advantage of accretive opportunities to grow. So we're making acquisitions and we're making discoveries.
You said to me offline that silver is sleepwalking into a squeeze. I'd like to get your take on what that means, and then I want to talk about Dolly Varden Silver in more detail in just a bit. So why sleepwalking?
So
we're not paying attention?
So this was a title of a report that came out of TD Securities.
Sure.
And I think it built upon, I think, one of the best reports I've seen in the industry, which came out on October 7th, 2024 from SCP, Sprott Capital Partners.
Okay.
But what these reports are talking about, they're talking about the fact that you've got a small group of miners that produce this stuff, that industry's coming in. But because investors have been hearing about silver's going higher, silver's being manipulated, and they've been hearing it for so long and they really haven't seen the price dramatically move higher, they've been lulled into this sense of security and this feeling that it's never going to happen. So it's the old, the frog boiling analogy of, the temperature's going up to a boil, but the frog's not jumping, because even though we've seen the price go up 100%, it's done it quietly. It's done it in a stealth mode. I've studied markets, and there is, the stealth mode of a bull market, and there's few participants. The bull market climbs that wall of worry with very few participants. It won't be until silver's making headline news, and it won't make headline news until, look at gold. Gold is at an all-time high, but is anybody talking about gold? Or are they talking about crypto? Are they talking about, the Magnificent Seven? Are they talking about, other asset classes? So we're in an environment right now where everything's moving up. So throw out all the old ideas of $50 silver, $100 silver. Maybe the masses don't even wake up to this until it's $300. That's what I'm seeing play out in the gold market.
The word squeeze implies some sort of action, right? It's like one focal event. What is that event that's going to squeeze the market? Is it going to come from the retail side and institutionals realizing we need silver in our treasuries? Is it miners just giving up on production for whatever reason, right? Something is going to trigger a squeeze.
Well, I think what could trigger the squeeze and is calling for physical delivery.
Yes.
We're in a business where the paper or digital market, the futures market, trades at a degree where you could in one day trade annual mine supply.
Yeah.
Okay? And these are paper contracts that can be settled not with physical silver, but with fiat currency. So I think what's going to cause the squeeze is investors. What's great, like these Trump tariffs. This was another part of the TD report that wasn't in the SCC report because, Trump just got elected. But, with the threat of tariffs, investors all over the world, and particularly in the UK, people are calling for their metal. They want it in their hands. They're worried about potential tariffs. They're worried about actually, possession is 9/10 of the law, right? You want to get that metal in your hands. So could that be the catalyst, right? All these things are building for that moment, and it's hard for me to put my finger on the calendar or the event, but in the meantime, the price is moving in the right direction. And what's fantastic for the industry, some of the best producers, all in sustaining cost to produce the metal, you can find great companies that are producing at $12, $13 an ounce. But on average, it's probably, the A6 is $20, okay? And then for the higher cost producers, 25, 27. The point is we're finally in a territory, David, where it's profitable to mine silver, and that hasn't even been the case for 12 full months. But it's nice to see the price appreciation. But in terms of the squeeze, look, I think the squeeze is real. I think it's coming. And I think we'll see it sometime in the next 18 months.
Is there a broader industrial narrative for silver and the base metals as well. Talked about the demand for silver coming from certain sectors, but what in 2025 is going to need silver the most, you think?
Need it the most. I think solar is up there as one of the lead consumers in industry.
Okay.
If you look back at last year in Q1, it was it was Indian investment demand in solar that took up a third of Q1.
Yeah.
So look, now if you really talk to the real silver experts, the David Morgans of the world, the Rick Rules of the world, what they'll tell you is in every great price move in history, whether it was the Hunts cornering the market in 1980, whether it was 2011, industry doesn't move the needle violently. That's investment demand.
Yeah.
And what silver really is it's gentleman's gold.
Right.
It's gentleman's gold. So I think what's going to cause the silver price to move is investors are going to want to get exposure to gold. And central banks are already doing it. And the wealthiest people on the planet are doing it. But for the rest of us, David, you and I are going to have to turn to silver for that same protection.
Where does silver fit into a new monetary regime?
Well, listen, for thousands of years, silver was money, right? You go back to how the dollar started. There was a silver component in the US dollar. And the ratios were 16 to 1. Those were the ratios. Those were the pegs. If you go back and study 5,000 years of history...
Gold to silver to gold ratio.
Correct.
Okay.
So anywhere between 10 to 16 to 1.
Okay.
That was where the ratio was pegged. Now today we're in an environment where it's around 85 to 1.
Yeah.
It's way out of whack. And if you think about it, if today more silver is being consumed in industry, when investors go to get that silver, they're going to be competing with industry for that metal. And so I think we're actually going to see the price go further than it ever could go before, because you've got the two components. Whereas, listen, gold does not get consumed in industry. Maybe 5% of gold goes in industry, whereas silver is 55%.
Maybe silver is just no longer a monetary metal. Think about it. I mean, this is just a counter argument. Otherwise, central banks will be stockpiling silver. They have gold strategic reserves. They don't have silver strategic reserves, at least not to the same scale, right?
Look, the Russian, Mr. Putin just came out and added silver to a list of precious metals that Russia will start accumulating.
Yeah.
So I think we're starting to see central banks make that move to silver.
Yeah.
The reality is when we're in an environment, where there's, billions and billions, and we're even using the term trillions, that represents a lot of silver at these prices. So I think it's a lot easier for the sovereigns to go after gold than it is silver. But I get your point, and I think that's why silver has traded more like Dr. Copper and has reacted more to economic demand. However, if you look at the great price moves in silver, 2011, 1980, even some of the mini rallies we've had in 2020, 2016, it's been on the back of investment demand. And so what you're questioning is a 5,000-year history going to be challenged because you've got a growing use case in industry? And I don't want to bet against that 5,000-year history. If you go back 400 years, the richest man on the planet Earth was a gentleman in China, emperor in China, who started taxing his citizens in silver. And so that created, the biggest silver reserves on the planet above ground, and it created the wealthiest individual on planet Earth. And I think if we go back to that history, and that was only 400 years ago, silver has been money, and I believe it will once again resume. And the difference between gold and silver And if you look at in the United States, there's a group of individuals, mainly white males, 45 to 80, who really celebrate silver even over gold. Because if you go back to that history, there was a time where it was illegal to own gold, but it was not illegal to own silver. So I think I think what you're seeing is you're going to see a huge percentage of the U.S. population come out and want to protect themselves. Now, the younger generation, like my son has actually accompanied me to this conference today, and he's more versed in the cryptocurrencies than he is the precious metals. So I think the millennials have gone out and they've gone to crypto.
Yeah.
And there's been a lot of capital that's been diverted away from precious. Now, that could be very, very dangerous. That doesn't have the same history. There's a lot of beta from Bitcoin to NASDAQ. So if we get a crash, typically gold is the commodity, the money, the store of value you want to own during uncertainty, during times of war, during times that the stock market potentially sells off. If crypto sells off with NASDAQ, that'll be a very, very interesting test to this new asset class.
And I just met your son. He's younger than the millennials.
Yes.
I think he falls into the Gen Zs
Correct.
category. Millennials, Gen Zs, they're more risk on, less risk averse. They like things that are volatile. They like things that are tech influenced, basically new trends. They like things influenced by social media. Very different crowd from this crowd at the conference here. Older crowd, less tech savvy, basically the polar opposite of everything I just described. How would you communicate your message to this younger audience? I mean, why should they look at Dolly Varden Silver or any silver company for that matter?
Yeah, so I really celebrate what crypto's done for that generation.
Yeah.
It's opened them up to some of the sound money philosophy that the Austrian school preaches. So I actually think crypto's done a great service for us.
Sure.
What I try to explain to speculators, to investors, to young people is if you like that volatility, look, if you're looking for a store of wealth, buy bullion. Okay, no counterparty risk, own it, have it in your hands. It's a store of wealth. It's a way to save. But if you're looking to speculate, okay, that's where the equities come in. And it starts with the royalty companies, then goes to the producers, and then goes to the developers, advanced explorers. So why an investor would want to own Dolly Varden Silver is because you've got a project that was once the richest silver mine in the British Empire. It was Canada's third largest silver mine. It's got a rich history. There's a big high-grade resource. If you put up a 12-month chart of silver, I think we did this in our last interview, and you put up Dolly Varden, it tracks it very well. Okay? And so if you're looking for exposure, but the difference is as the bull market matures, we're in the early innings, silver equities will outperform the metal by 300%. So last year was an interesting year. Silver was up 20%. SILJ, the ETF that tracks the juniors, was only up 6%. We need to add a zero to that. That's when we're in a strong stage. Phase 2 of this bull market is when you see SILJ up 60% when the metal's up 20%. And so why own it? You own it for the leverage. That's why you own it.
Hold on. The bears would say it hasn't outperformed silver, so therefore it's dead. Don't look at it anymore.
Yeah.
I would respond to that.
I think the way I would look, my approach in investing is similar to my approach in a lot of ways in life. Look, I have a belief. I spent some time recently with one of our large shareholders, Eric Sprott, Eric made a name for himself by being there and being a strong gold advocate when everybody said he was crazy. When I got into the business in 2004, gold was sub $500 an ounce.
Yeah.
And there were great debates with 99% of Wall Street, Bay Street, that said, my grandchildren's children will never see the gold price go over 500. But there were a few brave people like Eric who said, look, I've done my homework. Central banks have gone from being net sellers.
Right.
They weren't buyers, but they were neutral. They stopped selling. You know, when the exchequer in the UK, Gordon Brown, sold half of England's gold, you know, that marked the bottom of the market. So what Eric identified was the bottom of a market, and all the principles, all the debt that was being created. You know, you look at 1980, the last time the gold price had made a move to 800, debt had gone under Reagan from 1 trillion to, where is it today in the US? 30, 40?
32, something like that.
Yeah, so my point here is, you know, you've got to be patient, you've got to be focused, you've got to have conviction on your theme. I see myself as it's the alligator or crocodile approach to investing. I'm not running around like a rabbit chasing. I'm waiting for what I'm looking for to walk by, and then I pounce. And so, you know, sit tight, be right, be a contrarian. And, you know, and the fact that we're starting to see some numbers at the conference is a good sign.
Yeah.
We're starting to see a little bit of interest. And you look at, we're in a bull market, no question. Agnico Eagle, 52-week high. Gold price, all-time high. Or Agnico Eagle, all-time high, $55 billion market cap. The best in breed are performing. Has it trickled down to mid-tier producers, No, but all the signs are there. The price is sustainable at these levels and going higher. So I think, David, I've got so much conviction. And listen, for anybody who hasn't followed me before, go back to September 2022. Go back to September 2023. I've made certain calls on the silver price, and they've aged very well.
Here's my, and we'll wind it off here. Here's my question of how, the way I look at it is, I invest in a company because it's going to increase my shareholder value, any company it is. If I buy a stock like Apple, for example, I can bank on the fact that maybe Tim Cook will come up with new products down the line that people will like, maybe the new iPod, whatever the case may be, right? Same thing with any other company that I buy. What about for a silver exploration company? You guys aren't producing yet. There's no product that the average consumer can benefit from your, existence right now. Where is the shareholder value, and how is that going to be added per your strategy? I know every CEO has a different strategy here.
So I've been operating at a time where capital's been scarce.
Sure.
And it's been very difficult. So I presented this morning. I presented Dolly Varden, $1 a share, $32 million in cash, $300 million valuation, 140 million ounce metal endowment. Last year, we were 75 cents a share.
Yeah.
We had 10 million in cash, and the year before. What I've done over the last 5 years is I've built a company from 20 million to a high of 450. It's pulled back here, and I think this is why I've got a lot of conviction in the name right now. It's representing some incredible value, but I've demonstrated an ability in a bear market to build a junior. That every year I come here, the price is higher. I haven't done a down round financing.
But how is the valuation of the company determined if there isn't a change in production, for example?
That's a great question.
Company. Yeah.
And I was asked that question this morning.
Yeah.
And you know what? It's all companies are valued for different reasons.
Sure.
Right? The greatest value creation in our business is on a discovery.
Right.
Okay? It's that part of the Lassonde curve when a discovery is occurring. So one metric to value pre-production companies is their mineral inventory.
Sure. And
so you could apply a percentage of the value of their resource.
Yeah.
And you can express that as for giving you an example, let's take Dolly Varden.
Yes.
And let's take 140 million ounce silver inventory. And let's say we took and said, we're going to give the company a 10% value, 10% of where the spot price of the metal is. So if the spot price of silver is $30, we're going to attribute a $3, 10% of per ounce in the ground. So we're discounting the build, we're discounting the operating costs, And so as we grow that mineral inventory,
Right.
that's how we can assign a value.
Let me express this a different way. So the company has a net asset value depending on the inferred and indicated resources,
Correct.
right?
We can
how
come
do
up
you
with-
add premium to that net asset value?
So by growing that mineral inventory.
I see.
And also, depending on what category of where in the estimate, are they widely spaced inferred ounces? Are they tighter spaced indicated ounces? Are they really tight spaced measured reserves? So the more confidence we have, does the company have a permit in hand? Is the company financed for the construction? So all of these things are going to play into the multiple that you're trading. And so we're in a time right now where, unfunded developers in the gold space are trading at 0.2 NPV.
Yeah.
Right? Historically, they would trade at 1, right? I think we're at a time right now, this is the one thing I know, the disparity between metal price and equity has never been wider. And don't take that from me, take that from the legends of the business, take that from the Frank Justras, the Eric Sprotts, the Rick Rules, the guys who've seen multiple cycles, who've been investing for 40 years professionally and making billions of dollars doing it.
I was surprised at how low the attendance is at this conference so far. I mean, the interest right now is just, despite this incredible bull run that we've had, interest doesn't seem to be at an all-time high. Is that indicative of anything?
Well, listen, maybe people can do due diligence at home.
Yeah.
Right? Maybe they don't need to be here physically, right? Yeah. And I think that's why it's so important for me to come onto your program and to talk to people, because most people don't need to be here.
Let's finish off here. Give us a fun fact about you that we may not know. Who is Shawn Khunkhun? What's his vision for the mining sector?
Look, it's just to follow those who've gone before me. It's kind of a boring thing, but look, I want to be remembered for how we treat our employees, how we treat the communities. No one's going to remember the grams per ton, the earnings per share, but they'll say, okay, we trust him. He'll stay in the hot seat when things get tough. He'll share the bad news, like he'll celebrate the good news. And I just want want that investor's trust. And I celebrate the fact that we've been able to cultivate that trust, and it's given us a currency in this market. And I want to see how far we can take it. And really, my ambition is I want to build a top 10 silver equity.
Okay, let's follow up next time and see how you get there.
Okay, thanks for having me on, David. Always a pleasure.
Always a pleasure to host you, Shawn.
Okay.
Thank you for being
Thank you
here,
so
and
much.
thank you for watching. Don't forget to like and subscribe.